If the ground is black and yellow, it's the same way you showed me. Nod my head, don't close my eyes. Halfway on a slow move, it's the same way you showed me. If you could fly, then you'd feel south. Up north's getting cold soon. The way it is, we're on land, so I'm someone to hold true. Keep you cool when it's still alive. Won't let you down when it's all ruined. Just the same way you showed me. Showed me. You showed me love. Glory from above. Regard, dear. It's all downhill from here. In the wake of a hurricane, dark skin of a summer shade, nose dive in the floodlines, tall tower, milk craze. It's the same way you showed me. Cannonball off the porch side, older kids trying off the roof. Just the same way you showed me. You showed. If you could die and come back to life, up for air from the swimming pool, you kneel down to the dry land, kiss the earth that birthed you, gave you tools just to stay alive and make it out when the sun is ruined. That's the same way you showed me. Showed. You showed me love. Glory from above. Regard, dear. It's all downhill from here. Real life, remember how it was. I'm cheap, Michael Jackson, all this shit. Say what up to Becky, the shoe. Say what up to Penny. Say what up to life and mortality. Running up my bikes, running up. Not for me, 18, still in granny 6. Take it easy. Give me some sweet, bitch, I might like immortality. This is life, life, immortality. That's the way every day goes. Every time we've no control. If the sky is pink and white, if the ground is black and yellow, it's the same way you showed me. Nod my head, don't close my eyes. Halfway on a slow move, it's the same way you showed me. If you could fly, then you'd feel south. Up north's getting cold soon. The way it is, we're on land, so I'm someone to hold true. Keep you cool when it's still alive. Won't let you down when it's all ruined. Just the same way you showed me. Showed me. You showed me love. Glory from above. Regard, dear. It's all downhill from here. In the wake of a hurricane, dark skin of a summer shade, nose dive in the floodlines, tall tower, milk craze. It's the same way you showed me. Cannonball off the porch side, older kids trying off the roof. Just the same way you showed me. You showed. If you could die and come back to life, up for air from the swimming pool, you kneel down to the dry land, kiss the earth that birthed you, gave you tools just to stay alive and make it out when the sun is ruined. That's the same way you showed me. Showed. You showed me love. Glory from above. Regard, dear. It's all that the way every day goes. Every time we've no control. If the sky is pink and white, if the ground is black and yellow, it's the same way you showed me. Nod my head, don't close my eyes. Halfway on a slow move. It's the same way you showed me. If you could fly, then you'd feel south. Up north's getting cold soon. The way it is, we're on land, so I'm someone to hold true. Keep you cool when it's still alive. Won't let you down when it's all ruined. Just the same way you showed me. Showed me. You showed me love. Glory from above. Regardless, dear.
Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is February 21st, 2023, and it is a bit cloudy. There was some rain in the DC metro area, but it's a great day. And it's a great day mostly because this large triangular pattern that Bitcoin has been in for the past 5 days seems to be completed. Okay, it seems to be complete. So if we zoom out just for a second on the hourly time frame, you can see what I'm talking about. For those of you who may not be aware or may not know, in Elliott wave theory, there are 3 types of corrective patterns. You have flat corrections, you have zigzag corrections, and triangle corrections, okay? So this would constitute the triangle correction. And a triangle correction is essentially a triangle, right? And there are triangles that look like this, and there's triangles that look like this. There are also triangles that look like this, all right? But this sort of flat top triangle, in any triangle, whatever it is, a flat top or a rising triangle like this, a falling, descending triangle, whatever you call it, in any case, you're always going to get 5 waves, 5 sets of corrective waves, each consisting of 3 waves, right? So here you can see 1, 2, 3, 1, 2, 3. Each one of these is a wave. So that's the A wave right here. This is the B wave. This would be the C wave. There's usually one. It's typically the C wave or the D wave that's complex. It's a little longer. It doesn't follow the same sort of time signature as the others. Okay, so in this case, it seems to be that the C wave is the complex one, the longer one. Again, D and then E. That should be the completed pattern. Okay. So from an Elliott wave theory, from an Elliott wave perspective, you have a complete pattern here. And if you turn on your indicators, right, always using your indicators corroboratively, you can see that on the hourly time frame, the time it took you to put in 1, 2, 3, 4, 5 waves, you were able to reset your stochastic RSI momentum. So your momentum is reset, which is important because you can't make a move to the upside, or it's rare that you're able to make a move to the upside with overbought momentum on these crucial intraday time frames. So if you look at the hourly time frame, you can see we're oversold now. The 4-hourly time frame, we're equally oversold. Okay, so basically this consolidation has reset our momentum completely into oversold territory on the hourly and the 4-hourly. And let's check the daily. The daily, we're still up there, which is fine. There's still some ways to go, okay? But it's very important that that happen, at least on the hourly and the 4-hourly time frame. These intraday time frames aren't everything, but if you're to make a move, right, on a certain day, let's say you think you're going to make a move on a day like today, you would want to see a reset of that 1 hour and 4-hourly time frame. So that's how I would use the momentum indicator corroboratively there. Okay. The other reason we can say with a high degree of confidence that this bullish consolidation is a triangle, right, is because if we take our Fibonacci retracement tool from the bottom of this move to the top, we can see that this that this corrective pattern, this triangle pattern, has tested the 0.5 Fibonacci retracement level. That's significant because, according to Elliott wave theory, these triangles have to retrace to a minimum of the 0.5 Fibonacci retracement level. Okay? So a triangle has to retrace to the 0.5 Fibonacci retracement level of the prevailing 5-wave move. I'm not talking about a triangle in a wave 4 situation. That's a little different, okay? In which case, that 0.5 doesn't necessarily hold because you're not looking at a corrective sequence. But this should be, if this is indeed what we think it is, this is an A wave in 5 waves. This is a B wave in 5 waves. You expect a C wave in 5 waves. Pure impulse from here on out, okay? So that's the read. That's been the read that we've been getting this triangle. Also, from just looking at it from a pure pure price action vantage, as we said yesterday, you like the fact that even though you have a very clear resistance at 25 here, you're testing multiple times. You see the price is favoring this resistance and not so much the support, okay? That's favorable for bullish continuation. And we know in pattern analysis, these rising wedges typically break out to the upside. But one of the reasons they do characteristically is because you're favoring, the price is showing you that it's more drawn to the resistance than it is the support. The support has been hit 3 times, the resistance has been hit 1, 2, 3, 4, 5 times, okay, on this time frame. So you can see also why it's not that big a stretch to read the consolidation ending up in a breakout to the upside, okay? And finally, just zooming out a little more, what do you see here? Again, everything can be reduced to simple support and resistance. And that should always confirm any more intricate analysis, right? Very complex. I see so many people, especially Ellioticians, right? People on YouTube, they talk about Elliott wave and they give you these very complex, low probability, arcane setups. It could be this and it could do that and it could do that. That's useless. You can't trade that way. You have to decide. Are you going to go up or are you going to go down? Are you going to long or are you going to short? Are you going to buy or are you going to sell? That's essentially all you want to do, right? And in order to do that, you do the analysis to inform your decision, to give you yourself a high probability read, okay? It's not 100% thing, but high probability read. So when we use Elliott wave on this channel, it's not to impress with some highfalutin complex wave count. We're just doing analysis to give us a high probability read on what the market's likely to do, and at the end of the day, if it's good analysis, it should be corroborated by simple support and resistance. At the end of the day, nature can be complex, but it's simple. Fundamentally simple. Everything is fundamentally simple in nature. And when you're reading these natural phenomena, price action is a natural phenomena indeed. It's an expression of our tendencies to buy and sell assets on an openly traded market. So it's just as natural as we are, okay? As our group psychology is. You should have a simple, straightforward way to show, okay, this is likely to happen based off of support and resistance. That's all everything is. Support and resistance at the end of the day. The more sort of intricate analyses just enable us to be a little more precise when we're entering or we're exiting and stuff like that. And it's also good corroborative tool. So at the end of the day, this is simple support and resistance, right? This level that everybody said was impenetrable at 23K, okay, we got rejected from. Okay, we basically had some time. We experienced a great deal of resistance over a number of days, from the 21st all the way to the 1st. So it was almost like 10 days, 12 days of resistance. We lost that level. We got rejected from this level, and then we broke it. What do you do in price action, right? There's so many things. I say this every day. So many things that you don't know when you're doing technical analysis. There's so many things that are unknowable, essentially, right? You can say with a high degree of probability, but you can't say 100%. Only a few things can be said to be 100%. Very few things in any trading system or any system of analysis. And one of those things is on a high for significant levels of support and resistance, breaking them, they need to be retested. Okay, so in this case, this is a significant level of resistance. It was significant over here. Price action showed us. You retested it before you lost the level. You broke it and you retested it once here. So this level is important. And so that is why you had to retest it here. Okay, that's why 23.5 is so important. That is the retest of this level flipped. That's what we call RS flipping. Flip from resistance to support. That's essentially the move. That's essentially the read. It's just people don't do this because it takes time to let the trade play out. And you could see the most popular accounts, the most popular sort of thing that people are drawn to in technical analysis and trading cryptocurrencies, that, you know, a 24/7 market, is they want a day trade. They want to make money now. They want intraday. They want profits. But, you know, the best way to make money is slowly, actually, in trading. This is the best way to make money. If you see these high probability setups, right? Support to resistance flips. And support that you don't need an indicator, a VRVP or VPVR indicator to show you what the support is. As I said, price shows you on the 4-hourly time frame. If you spend about 2 weeks testing this as resistance, you lose it, you break back above it, you retest it as support, you know with a high degree of probability that level is conquered. At the worst case scenario, you come back and retest it before you're off. That's it. That's as simple as it gets. When people cannot explain to you what's going on in the market, simply it's because they do not understand it. So if you're analyzing the market and you have 50 different possibilities or probabilities that are likely probabilities, you're lost. That's not analysis, okay? And that's not going to help you make money. That's not going to help you trade profitably, right? So this is the read. This is why, you know, in the past few episodes, I said, you know, it's not much of a reach to say we're going to break 25K with a high degree of probability, because it's a simple read of support and resistance. That's it. Now, question is, what was this consolidation above resistance going to look like? I didn't know. Maybe it's a triangle. Maybe it's a running flat. You know, that's getting into the small time frames, but we're not trading this. You know, it's silly, low probability, foolish, even if you're an intraday trader, to trade this up and down and up and down and up and down. It's low probability. Low probability. If you zoom out just a little bit, you want to get in, use this as an opportunity to accumulate positions, to enter a trade, and you use that to enter a long trade based off of this high time frame setup. Again, most new traders, I was one of them, will not look at the market this way because it takes time to let it develop. It takes time to let this develop. This was 5 days of bullish consolidation, you know, and naturally, if you're, say, trading to make money, you're thinking, okay, how can I make money, like, at every opportunity? The price is going up and down, I should be making money, but that's not how you look at it, you know. But you learn that over time by losing money and seeing what low probability intraday trades are like. Okay, not every movement is worth trading. The best traders in the market, whether they're swing traders, scalp traders, or position traders, have accumulated long positions either here or here at the latest. They use this, they could see it. They know what is likely to happen. Just like how we say, if I look outside and it's cloudy, the air is thick, I know with a high degree of probability it's going to rain. I'm not a magician. I'm not a sorcerer, but I understand what precedes a downpour. It's just a normal, natural thing. It's just an understanding of natural phenomena. Same thing when you're reading the market. So just to dispel and demystify some things, a lot of people like to say, especially in crypto, could go up, could go down. You never know. Nobody knows. That's bullshit. With a high degree of probability, you should know where the market is going, or else what are you doing, right? You're a trading bot, essentially, which is severely capped in terms of its trading or its earning potential. All right, so that's Bitcoin. It's not that different than what we've been looking at for the past few days, right? Because we've been here for 5 days. And the title of this live stream is that. What is the title of the live stream? It's something, I know the idea. I forget the actual title, excuse me. But it's to the effect of 25K plus. So when we break 25K, it'll feel like a bull market. So many analysts are saying we're not in a bull market. This is a bear market rally. Even those analysts that, as I said, have been going long here, and even beforehand, even though they recognize this on the short time frame, maybe they don't have the skills to read really high time frame price action, or that doesn't interest them. So they're still kind of on the fence as to what this means, right? On a higher time frame. Let's actually zoom out on this. Let's go on the daily time frame. So for them, they're not seeing this resistance, this 450-day resistance flipped into support. That wasn't a thing for them. For me, this was the confirmation of the bull market, okay? The bull market started here, technically, but this was the confirmation of that. Because had this not happened, we could have come back into this channel, into this accumulation channel of 250 odd days, right? That was the main pivotal, most important move, and people will say 25K is the most important. It's important, but it's not the most important. This was the most important. This level of 21.6, whatever it was. Yep. So that happened, and we moved up from there. Now, it's not a question of whether or not we're in a bull market. It's not a question to me, okay? Personally, it's not a question of whether or not we're in a bull market. It's quite clear for a lot of different reasons. So I'm not going to rehash that here because I want to stay on topic. In any case, when we break this level, okay, by this level I mean this 25K, 23K level, okay? It's not just 25K, but it actually started at 23K. You can see it with this resistance. This is just the last remnants of resistance of this range. We're essentially, understand that a move up from here, let's draw the range, because I erased it, because, we're not dealing with it every day like we were before, but let's draw it, because we're talking about it, because I really want to illustrate this. Everything changes. Technically speaking, everything changes. Here, let's get rid of this. Let's clean that up. Okay. Although I'm asserting that the bull market actually started here on the 1st of January, right? It actually started there. This is very clear impulsive price action. If you read Prechter and Frost, you'll see they talk about the right look, right? And if you study a bunch of Elliott waves, you read a bunch of charts, you understand that impulsive waves do have a look. There is a look to pure impulse, and it just looks very impulsive. That's why we call it impulsive price. It looks just like up only or down only, right? Because it can go in either way. But here we're talking about uptrends. That is very, very impulsive. It not only has the look, but technically speaking, you can count your two degrees of A/B basing and a pivot in this portion. Okay. Now, even though you can say the bull market started here, you're not going to feel it. Most market participants aren't going to feel it until here. And I say feel very purposefully because understand, this is very emotional. People like to say, don't be emotional when you're trading. Actually, no. I would refute that. Don't be driven by your emotions, but you can definitely feel your emotions and acknowledge them. There's nothing wrong with that. That actually helps. Because when you feel elated, you feel euphoric, you feel what the bull market feels like. You feel that market psychology that people warn of. There's nothing bad about it. It's just, the whole, like, I don't know what it is, to be honest. I don't know what it is. But people feel guilty, perhaps, of feeling good. So they say things like, oh, this can't be, or don't get too excited. You hear that all the time. Don't get too excited, or don't get too crazy. Like, even saying bull market, for them, they associate it with something irresponsible. Actually, it's quite irresponsible not to acknowledge a bull market, because if it's staring you clear in the face, you're not acknowledging it means you're underexposed. Say what you want, but hedging when you're in a trend means you're not reading the most lucrative, the most profitable period of a market, right? When you're seeing the trend and you deny it, you're cutting your profits. You can hedge these, and a lot of people hedge, a lot of traders, because they don't have conviction in their calls, they hedge. That's what intermediate traders do. Everything's up or down, up or down, up or down. They're never all in. And that's, for a lot of people, good trading. But at a certain level, it's not good trading, because you associate hedging with risk management. Yes, it's a form of risk management, but you can also exercise good risk management and still have full conviction in your read. So I think, in my opinion, as a trader, I don't want to hedge. If I'm hedging, I just don't know, and I'm just going to say I don't know. But at my best, I have full conviction, and I know, and if I'm disproven, I'm invalidated, I still have a plan for that. Do you see what I mean? I'm still going to prepare myself in terms of risk management to live another day and still trade. Okay? So by that I mean, it's quite clear that we're in an uptrend. It's quite clear that we're in impulsive price action. It's quite clear that we're in a bull run, but most people won't feel it until we break this level of 25, because up until now, we've been stymied. We've been restricted by the price action of this channel. This channel, of course, representing the entire accumulation range that Bitcoin's been in for 250 plus days. Okay? So, on our high time frame read of the market, it's quite simple, right? Again, everything should be relatively straightforward when you have a good understanding of your market read, okay? This was a downtrend, all right? There was a downtrend represented by this line that lasted 450 or some odd days, all right? This downtrend, any trend has to be either absorbed or distributed before being changed, okay? So if this was a downtrend, this represents the absorption of that trend, absorbing the supply dumped on the market at these levels, all right? People who say, that one reason we can't be in a bull market is because we never went sideways enough, or we didn't put in a double bottom. Again, what are you looking at? Very clear double bottom here. Quite clear. Adam and Eve bottom, okay? Also, 250 days of absorbed supply, sideways price action that precedes, that follows a dump in the market, okay? And now that you leave that accumulation level where you've been trading up and down and up and down and up and down for almost a year, now you can run. So this is why also in yesterday's show, I said the amateurs are going to target 30K, 32K, because they don't see the forest for the trees. All right? 30 to 32K is in no way your technical target. Even if you thought that this was a bear market rally and you took the break of this very clear cup and handle pattern, the technical target is way higher than 30K. As we said yesterday, it's closer to 46,000, okay? That's number one. So if anything, if you were looking to, trade every possible significant resistance, you would target the 44 to 46K level, okay, for the break of this move. But there's reason to believe that you can go much, much higher, because if this represents the accumulation of the bear market and the bull market started here, but you won't feel it until you're outside of the clutches, the restrictions of this channel, this accumulation channel, then you fly here. And if you're flying, the character, so this is what I mean by feels, the character of the price action is going to be completely different. Even different than this January run where we went up by 50%, which is great, but it's nothing to write home about. That's 50% in crypto, right? We do hundreds of percent in a day sometimes, even in Bitcoin. So, reason that whatever impulsive move you had in the 16.9 to 24K range was limited, it's because there's a cap on the impulsiveness, on the violence of a move when there's so much traffic with so many buy and sell orders there, okay? So this is why I'm saying it will feel like a bull market with the break of this 25K resistance. But that is not where the bull market started. The bull market actually started here, technically, okay? And this impulse will continue even more violently there. Okay. The next thing I want to say about this is the following. Another reason you do not want to put certain targets for this next move is that if really the character is going to be different, and you can see something like this, right, where you're doing, look at this. So even though this is a red candle, these are red candles, I'm just pointing to the impulsiveness. I'm pointing to the character of the price here. This candle right here in particular gave you, I remember this one, 18% in a day, okay? And it was just day by day by day. This is part of a corrective pattern. This is counter trend, okay? Remember, the larger trend for pretty much all of crypto is up. Any retracement, any bull market is a counter trend move. So this impulse in a counter trend move gave you an 18% candle in one day. If you get something like this, and then the following day you get another 5-10% candle, you don't have time or the opportunity with that level of volatility to divest yourself of your positions and get back in safely. This is another thing that people are not appreciating. They're thinking that the market's going to feel, again, I'm using that word very, very purposefully. The market's not going to feel and look and trade like it did for the past month and a half. Even though we've been going up, the character of this uptrend is going to change completely here. That's what people don't appreciate. And their plans are still the same, right? I wouldn't say they're bad traders. I'd say average intermediate traders have one plan in every single phase of the market, right? It's kind of like having one outfit you're wearing in the winter, the fall, the summer, and the spring. It's cool. You can do it. Like if you're Doug Funny, but like, don't you get cold in the winter with shorts and a cardigan and a t-shirt, right? That's a nice spring outfit, Doug Funny, but it's not great for the winter. It's not great for when it rains. You know what I mean? You gotta understand there are different phases of the market. Just like in nature, there are different phases of seasons. There's different phases of everything. You have to adapt and realize and recognize the different phases. And in this phase, going so fast, so violently, it's possible that we hit this 40K level in a day or two. So at what point do you have, what opportunity do you have to now do your range trading? Because up until now, for the past 250 days, range traders have ruled the day. If you're good at range trading, you've been killing it for the past 250 days because we've been in a range. We've been moving like we're in a range. We've been moving with the speed of a range. You can trade that up and down. You could be greedy. You could trade every single last little move. But you get punished for that kind of behavior once you get into impulse where there's very little resistances to dim or to buffer or to tamp the volatility. Okay, and the volatility I'm talking about, if you haven't experienced it in a bull market, you can go and hit a resistance, do something like this in a few minutes, and then continue on. That's the kind of volatility that we see in bull markets, the type of volatility that breaks exchanges, the type of volatility that exhausts liquidity. And I've tried it, and if you haven't, you'll see what I'm talking about. When the price is moving violently, like it does in a bull market, you can't get onto your exchange. You can't buy or sell, right? You don't have the time you usually have to set up your trades, and it's so volatile. You set a stop somewhere or you try to calculate a stop. It's hard to see because when you're looking at that candle, everything happens on that time frame. You want to jump down time frames, you can hardly see the movement of the correction where you would heretofore have used that correction to set your trade up. Do you see what I mean? So this is why I've been saying for many months that when we did get into that type of impulsive, violent price action, the move is to buy support and go away. You just want a one direction trade. And this is, again, recognizing the seasons, recognizing the different types of trading that there are in every market. So many times, crypto traders will make the mistake of limiting themselves to learning about markets, to learning about price action with only crypto. Doesn't mean you have to trade other markets, but understand that there are plethora of resources with people in history trading other markets and teaching and learning about patterns. And when you learn about those, you understand there's impulsive down markets, there's sideways markets, and there are impulsive up markets. Those three types of markets are not traded the same way. And if you do, what you'll realize, if you've really done your homework, is that your win rates are different in each and every phase. And this is this is high level stuff. This is the best of the best. They go back and they chart their progress. They chart their wins. They chart their win rates. They chart their losses, the percentages, all that stuff. Okay? A lot of times prop traders do this, right? At prop firms. Because they have to. It's part of their jobs. And they'll see sometimes that they're best going shorting, or sometimes they're best longing, or they're best range trading, right? So they play to their strengths. But even if your strength is range trading, understand that there is such a thing as when you realize and recognize that different phase of the market going in that impulsive direction, you can no longer apply your same techniques, your same strategy to that up only market. Okay, I hope that was good practical information. That's something I took years to learn and figure out. It really took me years to when that light bulb clicked for me. It was like a different my earning potential in this trading thing was unlimited, and I was like, that's why everything clicked for me with that realization. I know everybody's different. Maybe this doesn't apply to you. Maybe you only buy spot. But if you're a trader and you're struggling, or you're not struggling, you're doing okay, but you're wondering why you're doing well in some months and other months you're not, and you're using tried and true techniques, maybe that helps you. Okay, so that's Bitcoin. That's what I can see. That's why I'm seeing it. That's why we're saying it'll feel different above 25K. Let's go back to the small time frames and see what's going on. Okay, so on the small, let's get rid of this as well. We don't need it. So on the small time frames, I think today, at some point, we get back up here and we break this, okay? And the reason I say today is because, like I said, I see 5 waves in our ABCDE triangle, complete, okay? And I see that with our momentum indicators, all of our momentum, intraday momentum indicators that are worth following, like the 15-minute, right? The 15-minute is so small that it'll go up and down quite a lot in a day, but the hourly is bottomed out. The 4-hourly is bottomed out. So I can see a move very likely. Everything's pointing to a move at some point today, attacking that 25K region and breaking it, and then getting into that different phase of the market. We're already in that different phase of the market, but really feeling that different phase of the market, if that makes sense. Okay, so that's Bitcoin. All right, now I would also be remiss if I didn't mention the DXY. Okay, this is what moves our market. We say that all the time on this channel, and we saw how the DXY hit key resistance here. Okay, this 460 or 480 day resistance or 450 day resistance. I don't know. It was a long time. All right, many data points for this resistance. We rejected off of it, and what I'm seeing here is a 3-wave move that looks like a zigzag. What do I mean by that? Again, in Elliott wave theory, there are 3 different types of corrective sequences or patterns. There are flat corrections, there are zigzags, and there are triangles. Okay, lots of different flat corrections, but there's pretty much more or less one type of zigzag. Okay, a few different types of triangles, a few different types of flat corrections, but one zigzag. And the zigzag is essentially 5 waves up, 3 waves down, 5 waves up, or 5 waves down, 3 waves up, 5 waves down. Okay, so it's a 5 through 5 correction. That's what I'm seeing here. 5, 3, 5. Okay, and those 3 waves come in between the 0.5 and the 618 of the 5 waves. Okay, I could be wrong, and it could be a flat correction, but as it stands now, I would say that it looks more like a zigzag. Okay, this is another reason I'm seeing a big move in Bitcoin sooner than later, because looking at what we've done thus far, I'm seeing some strong bearish divergence, right? Confirmed right here. If you can't see it, I'm going to point it out. So here we can see on the hourly time frame, it's not the biggest time frame, but it's significant. We've got about an equal, let's make this arrow smaller. We've got about an equal high on the price action, and we have a much lower high on the momentum indicator, okay? And one could say that already played out in this candle, but I believe that this is a larger pattern playing out. Okay, on the 4-hourly time frame, looks like we're moving up, and let's see. This is 11 o'clock candle. The next is the 7 o'clock candle. Or sorry, this is not the 11 o'clock. Okay, the 3 o'clock candle's next. Okay, 3 o'clock candle may take this momentum up to overbought territory. Okay, which would then make both the 4-hour and the hour overbought. Okay, and the daily is way overbought, and it's been overbought. Okay, and I think the weekly is overbought as well. Okay, so basically all your major time frames are overbought. Okay, and that basically tells you, if you know how to use your indicators, most people do, and still it's weird, but there are a lot of prominent, big name, big account, always on TV analysts saying that the DXY is bullish. I don't get it. Again, the indicators are unambiguous on it, and when I say the indicators, I'm talking about our momentum indicator, our stochastic RSI. About as straightforward as a momentum indicator as it gets, and it's very clear that we're overbought, right? And we're not going higher. But I think the most clear signal that this is major resistance is this 450-day resistance, right? That coupled with the indicator being overbought on a higher time frame, it's only a matter of time before you go down, and that is your crypto and equities bull run. So the DXY is pretty much looking like we thought it would. It's doing what we thought it would. Yeah. And it's basically fighting for its life in this range, not doing much, just chopping, right? Chopping correctively. There's nothing bullish about this, yeah? If you're a bull on the dollar, you don't want to see this. You don't want to see impulsive price action and then a counter wave that looks choppy. That's usually a good sign that you're putting in a bear flag, okay? And then, like I said, if you look closer, you see this is impulsive, this is corrective coming between the 0.5 and the 618 of these previous 5 waves. It screams zigzag, okay? Which is usually what people mean when they say bear flag. Do you see that? All of this took all this time, and you couldn't even break the phi ratio of this preceding dump. Do you see? It's basically, you think trend, counter trend, resume the trend. Okay? The counter trend is trying to, it's retesting. It's like a test and a retest. Okay? So let's establish the direction of this move. Okay? Now let's test it and see, are there any more sellers? Anybody else wanna sell? So basically your buyers step in because they think, oh, this is probably not what it's doing, because remember, it went up for so long, this has gotta continue. So the buyers kind of step in. And then more sellers, basically the sellers are not exhausted. The selling pressure is so strong that this continues like this. So that's what I'm seeing with the DXY. And again, that bodes well for a bullish Bitcoin, for a bullish stock market, at least in the short term, okay? And if you follow my work, you guys know that the stock market is in a bear market rally. I know a lot of people, they will do analysis of the stock market and immediately think that Bitcoin follows the stock market. So they see a bear market rally in the stock market correctly. They read a bear market rally and they think Bitcoin must be doing the same thing. It's a huge mistake. They're not at all the same. Not at all the same. Both are going up. Bitcoin, crypto going up in pure impulse. The stock market going up in a bear market rally. So the analysts that are telling you we're likely to see a real nasty Q3, Q4 of 2023 for the stock market, I believe them. I agree. I think that when we do turn down, we're going to make lower lows in the stock market, but not so in crypto. Not so in crypto. Those markets, although they seem like they're in lockstep, because obviously they're both run by the underlying asset, the US dollar, they're essentially completely different. Even though they're both going up, they're going up in different phases of the market, of a market cycle. So that's Bitcoin. So at this point, we're just going to go through some altcoins. And if you have any altcoins you want me to look at, just let me know now. If not, I'm just going to go through the usual list of our watch list. Okay, these are altcoins that I'm currently trading. So you can see there's a decent amount of red in the market, but I don't expect that to last. I do not expect that to last. And even as red as it is, you don't see, massive moves to the downside. You just don't see it, right? The character of the market's changed. Like, let's say you didn't know anything about technical analysis and you were just looking at, and this was me at a certain point in time earlier when I first got into crypto. I would just look at, not TradingView, but, I would look at watch lists in Coinbase or CoinMarketCap. And you can tell when you see positive price action for many days in a row, okay, the market's kind of trending in a certain direction. And then you can see some red. And when on the red days, when the red is like the worst, the biggest sort of drawdown is like a 7% move or 8% move, you're like, oh, this is very, very meager correction vis-a-vis the prior days of positive price action. Do you see what I mean? So, like, yeah, it's really red, but okay, key is the one that's most down, but look at what it did. I was talking about this yesterday. It had gone up hundreds of percent in the past few days, right? In the past 3 days, it did. Past 3 days, it went up 300%, 297% in the past 3 days. So it's down 16% now, which is nothing, right? Because it went up 300%. It 3x in the past 3 days. That's 100% each and every day, pretty much, for the past 3 days. That's bull market type behavior. Obviously, you can get bear market rallies that give you those kinds of figures, but again, we do our analysis and we can see quite clearly there's nothing bear market rally about this price action. So in any case, let's move on and look at these other altcoins. Okay, ADA, I think, is doing something similar to Bitcoin. All right, very similar to Bitcoin. And here you can kind of see the same type of inverse head and shoulders. Okay, that's the first thing that jumps out at me. Second thing, this was a 5-wave move, this was a 3-wave move, and I believe if you take our Fibonacci retracement level, we will see that did we? No, we didn't. So we didn't hit the 0.5. So that's a great way to confirm. Oops. That's a great way to confirm whether you're in a zigzag or not. This can't be a zigzag, even though this... What's happening? Sorry, 1 second. Okay, what did I just do? I did something that I didn't want to do. Okay, there we go. All right. Even though we're seeing a triangle, okay, well, A, B, C, D, E, and it looks like Bitcoin does. This can't be an A wave, a B wave going into a C wave, because, as I said, you would want a 0.5 Fibonacci retracement of this prevailing, this prevailing 5-wave move up. So it's not a 535. The only other thing this can be is a wave 4. Okay, so again, those are details. Practically speaking, they're both called bull flags, because this is bullish consolidation. This is an impulse. This is consolidation. You expect a break up and out. But this one's a little different than what you see in Bitcoin, because it looks like you've started going impulsive here, and this is your wave 4. That is typically a complex correction, especially if this is a simple correction, and then you're just expecting a wave 5 here. So that's what I see in Cardano, and that's why I would characterize it as being in a nice impulse, a wave 4 correction of a nice impulse. And yeah, effectively, you're just holding support here, right? This previous support, much like Bitcoin, this support level. All right, let me not be lazy and let me do what I preach. Right, support and resistances are levels. They're not lines. They're better represented as levels. So let's use our rectangle tool. So yeah, you're holding this level of support, which was resistance over here, kind of like Bitcoin was for a couple weeks. It was resistance. You popped up above it, but you didn't hold it. You dropped below it. You lost the level. You came back. You gained the level. Now you retest it in 3 moves. So you're basically retesting and you're making sure that this holds as support. This is an RS flip. That's another way to look at it. A simple, easy, practical way to look at bullish continuation. Bonk, still in this channel, right? Not doing much. It's sleeping. Your average market participant with little conviction is probably out on this, but this is probably one of the best buys in crypto in terms of return on investment. Okay, not financial advice, but just the fact that it's such a low market cap, the fact that it's put in such a regular accumulation pattern, and that it's at the bottom of said accumulation pattern. You're literally buying the bottom of the bottom. You can consider this entire channel as the bottom, as an accumulation zone, as a great buy opportunity, because this is the cause and you're looking for the effect, which is the markup. You're literally at the bottom of the cause. You're at the bottom of the accumulation level. So even within the channel, if you mark up and some way, with some low probability happening made it so that you lost this, your risk is minimized that much further by buying the bottom of a channel, because you're more likely than not going to go up before you lose it, if you ever did. But chances are you're in a bull market, crypto's in a bull market, you're not going to lose this channel. What you're going to do is you're going to break it, retest it, and go on from here. So, I mean, if I could buy more, I would, but I'm pretty much exhausted in terms of my allocations. But I've allocated as much as I could. And it's just so, we'll revisit this in a few months and we can keep talking about it, but this is literally just going to print money, but at this level, buying anywhere in this channel, but especially at the bottom of this channel, right? Because when it takes off, it's going to take off. There is little to no resistance in this because it's so new. All right, Dent. This took off and it's exhibiting a clean, impulsive price action. A wave 1, wave 2 situation, wave 1, wave 2 situation. You're going to keep saying wave 1, wave 2 situation as this impulse, this high time frame impulse builds on the smaller time frame with a series of wave 1, wave 2, wave 1, wave 2, wave 1, wave 2 of diminishing degrees, okay? Building for months and months and months. So this is great. For people who think we're in a bear market rally, you don't get this kind of price action in a bear market rally. In a bear market rally, what you get is a base, okay, a clear corrective base, and then you get impulse from that clear corrective base, okay? But you don't have a clear corrective base here, right? This is it started as pure impulse after a nice running flat correction and a retest of a high time frame resistance as support. So anyway, people will figure it out sooner than later, right? Especially when we make higher highs in Bitcoin, make all-time highs, we go into six-figure Bitcoin, maybe they'll stop with the bear market rally thing. Okay. Dodo. Sorry, guys. I missed my chats. Akanksha says hello. Hello, Akanksha. Apologies, I wasn't paying attention to the chats. Akanksha says, could you look at FTM and chart one chart? Oh, could you look at FTM chart and one chart? Yeah, definitely. FTM will add one. Harmony one is in my watch list, so I will add that to what we're looking at. Okay. Let's keep going, and we'll just remember to do FTM. So Dodo looks great. Look at Dodo. Look at what Dodo did. That sounds funny. Look at what Dodo did. Okay, this again looks like a really nice impulsive move. On the small time frame, if you're just zoomed in, looks really nice. 5 waves up, 3 waves down. Look like you're going to continue from here. The other thing to notice is if you zoom out just a little more, what you can see is you're essentially retesting this resistance right here. Okay, let's be true to form and pull out the level like so. You're retesting this resistance as support. There's nothing, you're basically saying, like, if you can read a chart, and again, it's basic support and resistance. You don't have to know anything about LA wave, Dow analysis, Gann analysis. If you're like interested in like really like arcane, complex, almost mystical technical analysis, right? Elliott wave is kind of mystical in that it uses these sacred proportions with the Fibonacci and stuff like that, but Gann is like that much more, okay? And it's so secret, and he was so accurate, he took it to his grave. Like, there was like a key to his analysis that he said he's never going to reveal, because in the wrong hands it would be devastating. So he took it to his grave. But in any case, you don't need any of that to read a market, to a respectable level, to be profitable and to be accurate and to be consistent. This is basic support and resistance. Whatever this is, whatever you want to say this is, you were under that resistance for all that time. You broke it and you retested it, and you just make your way. So that's what Dodo is doing on the even higher time frames. Okay, nothing bearish about that. There's nothing bear market rally about that. You don't do that in bear market rallies. Bear market rallies don't retest crucial resistance as support. Okay, and for people who like to, say back in 2019, they do this thing where, they don't look outside of crypto to study markets, to study price action. And so they literally have like 2 or 3 examples of a bear market and a bull market, and that's their entire world. And so when they look at bear market rallies, they literally look at 2 or 3 examples. And one of those is the 2019, I believe it was 2019 to 2020 bear market rally, which was clearly 3 waves up. Again, you don't see any retest of resistance as support there. This Dodo is doing that here. So that is amazing. That is huge. All right. Let's see. Next we have Dogecoin. So this is, I think, doing what Bitcoin's doing, okay? In that this is quite clearly 5 waves up, but it's a corrective impulse. So it's an A wave. I would say this is a triangle, A, B, C, D, E, right? Quite clearly. And I just without even pulling out the Fibonacci retracement tool, I can tell that this is retraced between the 0.5 and the 6.8 of this preceding 5 wave move. So I would call this a B wave. So I'm looking for a C wave. Easy read. That's how I read Dogecoin. Okay, and when it's all said and done, in terms of simple support and resistance, this is that support that you broke, or sorry, the resistance that you broke over here, and this is your retest. And you're so bullish that you created a triangle where your retest of that support area makes higher highs because you don't need to come all the way back down. Okay, so that's how I'm reading that. Ethereum. I would say that this is like Cardano in that this is a wave 4. It can't be a B wave because these 5 waves, this triangle retracement doesn't come and retrace to at minimum a 0.5 Fibonacci retracement level, right? It doesn't retrace to at least half of the way of these 5 waves. So I think this is already impulsive. You're looking at a pure impulsive wave. This is a wave 4, and it's likely going to go into an extended wave 5. Okay, and that extended wave 5 is likely going to give you a target of, let's see, that extended wave 5 is likely to give you a target, a technical target of this right here. Something like this. About 3,300. Okay. I think that's the conservative target. You're doing about 100% move for Ethereum for this next move up, right? Because, again, you're just doing pattern analysis. And for my double bottom people, there's no double bottom. You need to form a double bottom. Like, I don't understand what people are looking at. This is very clear double bottom. This is what you call an Adam and Eve double bottom. And this is the neckline. And the technical target is the height of the highest sort of amplitude of the pattern, right? Superimposed from the side of breakout, which gives you about 3,300, thereabouts. Okay, so I would not be surprised if we went here and then at this level did some more consolidation to continue. All right, so that is Ethereum. Let's go back on the 4-hourly time frame. Okay, let me just check. Block Patrol says, Heidi, can you please look at GNS Gains Network token? What do you think the price movement could look like on a high time frame? Okay, let's add that to the shopping list, as it were. All right, we'll add GNS to our analysis. Okay, so that's ETH. Litecoin. This is clearly a corrective pattern. A, B. Why is it corrective? For sure, because you've broken the 0.618 of this. So you know whatever you got here was corrective. This is counter-corrective. Now you get an impulse. Likely. Yeah. And at the end of the day, you're essentially holding this level. I'm going to draw it by hand. You're essentially holding this level of support. Okay, you've been holding this level of support here, 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 here. So it's strong support. You're basically consolidating up and down here. And eventually, once you break this, you're off. You're off. This is basically what you see in super bullish, really bullish assets where in a regular run-of-the-mill asset that wasn't as bullish, there's not as much buying pressure. You see this straight, okay? You'll see this like this, right? You'll have these corrective waves go up and down in a straight line. But here, because Litecoin is so bullish, you see that up and to the right. But I think this is corrective. This was corrective. 3 waves, 3 waves. You know, I think you finally get your impulse right here. Right? So that's Litecoin. Again, all of these assets that have overcome their bear market resistance, their bear market accumulation resistance, like, even if you don't know when they're going to run, they should be assumed to run. Because if they were going to be bearish, if they were going to be, if you would expect them to break down, you wouldn't have seen them retest the high time frame resistance as support. Okay? So that's basically the high time frame analysis, why you just want to be bullish. There's sometimes you just want to be bullish. You just, everything you look at, you should look at in a bullish bias. And then other times, everything you look at, you should look at with a bearish bias. And that's the safe, responsible way to read a market. Not, it could go up, it could go down in every phase of the market. That's how you look at sideways ranges, accumulation ranges, right? Again, learn your different phases of the market. There aren't 50 million. They're just 3. You can count up only, down only, and sideways. Or you can count up only, down only, sideways from down to up, and sideways from up to down. Okay? You can look at it as 3 or 4 phases of the market, however you want to say. So the sideways from down to up would be accumulation channel, all right? And then the sideways from up to down would be a distribution channel. But you have to know your phases of the market just like you know your seasons. And, you know, if it's the winter, you know, and you have to shop for clothes, you're not going to you know, a Hawaiian shirt store, you know, to shop for your clothing. You don't know what the weather is going to be like every day in the winter, but you prepare and you get a winter jacket, you get some hat and some gloves and some sweaters and shit. That's how you have to trade, how you read the markets. You recognize the change in seasons. And essentially these pivotal retests of high time frame resistance or high time frame support, losses of high time frame support, those are like the equinoxes. You have to be able to read this to be profitable in just like generally profitable and generally adept at reading the markets. And you would be surprised how many traders with big accounts who supposedly make all their money trading don't have any clue. They think the market's the market, it's the market, and it trades the same way all the time. They have no clue about this. But that's a very fundamental fact about markets. JY's Adventure says, love the hard work, Dean. Can you look at Velo protocol? Velo. Okay. I'll have to reduce the font on this so we can fit more words. Velo protocol. Yeah, definitely. Let's look at that. So we got Velo. We've got gains, and we've got FTM. All right, we'll do all that. We've got time today. Nobody has to be picked up from school. All right, RSR. Okay, RSR is essentially doing what we said. It's consolidating at resistance, and the resistance is the midline of this bear market accumulation. I was even waiting for it to retest this high time frame resistance as support, but again, who knows if this retest wasn't done on a smaller time frame over here. Okay, maybe it's still coming. I don't know, but I'm prepared. I'm prepared for the price to come all the way back down here, right? Especially given that this represents a massive inverse head and shoulders, Okay, maybe it's not, because you see that? If you look at this high time frame head and shoulders, your neckline is pretty much over here. And again, I'm not going to draw this with the rectangle tool, because the rectangle tool can only go in a straight line. But if you look at levels, right, if you think of support and resistance as levels, not a line, you can understand how this may be a level that was in fact retested with this move. So that could just be it. Okay, so that's RSR. I do expect a break of this midline, retest, and then continuation, and a targeting the upside, the top of this channel, right? Because that's how channels work. You work on the midline. If you're consolidating at resistance at the midline, eventually you target the top of the channel. We do the same thing. It works on every time frame. So this is a 4-hourly time frame. But if you look at Bitcoin on the really high time frames, the same stuff is going on, right? If we look at Bitcoin on the really high time frame, we got exactly the same thing. So you'll see the midline of the channel was when we hit 60K and 69K. We basically tested the top of the channel. We consolidated at resistance, but then we eventually lost it, found support at the base of the channel, and now we're probably going to go up, consolidate at resistance, and finally break it. So when we're looking at a Bitcoin going to six figures, it's kind of just basic channel trade, okay? If you can read charts on a high time frame. But a lot of traders don't even know how to set up their charts on a high time frame. A lot of YouTubers are setting up their high time frame charts like this. So, they don't even know where to begin. It doesn't make any sense to them. So do your own research, learn how to set up your charts, look at it just as a basic trade. Forget that you're looking at the weekly time frame and just think of it in terms of a basic support and resistance. Yeah, thanks JY. JY says nice stream update. The chat the chat feature. I like it as well. It just it's easier for me to follow with the chats, even though sometimes I was so zoned out that I didn't even look at that part of my screen that had the chats up. But yeah, I like it as well. Alright, so that point was made. Let's go back to our altcoins. We were on RSR, SHIB. Okay, back to the 4-hourly time frame. Okay, it's quite simple. You're holding support, right? You're holding support. And you're doing kind of like what Litecoin's doing. You're doing what would otherwise be in a not super bullish asset, something, a consolidation that would be straight, but you're doing it up and to the right just by virtue of your bullishness. So what I'm seeing in SHIB is that you're doing a consolidation up and to the right, and this is a channel, and eventually you're at the bottom of the channel. This represents the bottom of the channel. You're eventually going to test the top of the channel, break the top of the channel, retest it, and then move. And that's all I'm seeing. Nothing more, right? If you're trading this on a smaller time frame, that's the move. Obviously, at this point in time, everything should be done on a higher time frame with understanding that we're in a high time frame impulse. So buy support and, go away until probably April or May. All right. Synthetics, doing the same thing that we just saw with SHIB, except doing it on this support line, which is represented by the midline of the channel, right? So we claimed the support, danced around it, retested it, claimed it, broke the resistance, retested it as support, and now we're putting in a series of corrective waves up and out of that channel. So again, you're at channel support, you're going to make your way up to the top of the channel, break it, retest, and then move on. The top of your larger channel is pretty much right there. So you're definitely going to come up, bounce off, retest, and then continue. So you're just matriculating, little by little, up and through this bear market accumulation zone, which is represented by the purple channel. Okay, Tron. And another point I want to make is we've been looking at these things pretty much every day for the past few weeks, ever since January. And one thing to notice is that it's a bull market because every time we look at them, these assets, generally speaking, whether they're in correction or whether they're in impulse, in the aggregate, they're going up. If you've bought at any point in time, you're going to be up. You just wait a little bit, you're going to be up. Either you're moving impulsively strong like this, or you're moving and chopping. Usually you're chopping up and to the right, If you don't read price action carefully, you don't know that this is some sort of, 5-wave move. This is some sort of intra-wave for correction, right? This is another 5-wave move. This is wave 2 into another smaller degree wave 2. You don't have to read all of that. All you have to do is see that we're making higher highs and higher lows. The price looks like a lot of different things. It looks like sometimes like this, sometimes like this, sometimes like that, but it's in the aggregate, it's going up. You know what you're dealing with. You're dealing with a strong trend, right? That's so strong that the price can go sideways and can go up and go sideways again and go up, but by hook or by crook, what it wants to do is continue the uptrend. That's what you want to notice. And also, most importantly, the high time frame resistance is when you zoom out, broken, retested as support. That is what should make you super bullish, right? That's a 600-day retest right there. You buy that, you change your life. You're buying 600 days of accumulation, right? When you look at these things in terms of cause and effect, I think it really helps, right? Because people always ask the question, why? People in crypto like to pose, well, where's the money going to come from? Why is price going to go up? Nobody's buying. You mean the Chinese are going to be buying? Like, who's buying, right? In this economy, so on and so forth. But if you study technical analysis, if you study markets, right? If you're not just, if you're serious about your education, you understand that markets move as a result, as Wyckoff so elegantly stated, as a result of accumulations and distributions. That's it. You can say that's it. Markets move as a result of accumulations and distribution. As we see when a project launches, typically fair value launch, it goes down, it dumps. Everybody's dumping their tokens. The team assigns a certain value or price per token, and everybody who is an early investor or people who have airdropped the token, they take profit. And then what you see is a period of accumulation. And this is the cause for the subsequent rally. Okay? Just like we see here in Tron. You went up, you have 650 days of accumulation. This is a matter of course. You don't need to do anything. It's already been done. Do you understand? Like, you don't, like Justin Sun or like, nobody has to step in and pump the price. The price is already, actually the target's already put, the target's already set as a result of this. Few average market participants, when I say average, I mean people who don't really study price action, understand that. They think that all of a sudden, for no reason, the price is going up, and they make no bones of this. This doesn't make any sense to them. But for us who really study these markets, when we see this, we see pools of liquidity, pools of money accumulating, and now we take advantage of it by taking this breakout trade and letting it play out, then taking profit at the top of the move. So, that's again why we're bullish. There's so many things that if you can see, if you can read markets to a decent level, To be even a little bearish right now is an affront to your net worth. Yeah, like I said, this is pure impulse, wave 1, wave 2 situation. And what I'm seeing here is this is a second degree wave 1, wave 2 situation. Is it a second degree wave 1? Yeah, wave 1, wave 2 situation. Maybe this is a wave 4 of this smaller degree. I would say that's a wave 4 of this smaller degree. Okay, XRP up below the midline, came down, missed it, didn't hold it, came back up, retested it with this move. You're moving on. Okay, that's a simple channel trade. You flipped the midline of your bear market accumulation from resistance to support. Now your next target is up here. And then once you're here, what you want to do is see this, retest that as support, and then you're off. But you're going up. You're going up. And the other thing that's clear is this is one large inverse head and shoulders. Obviously, it's confirmed by a break of the neckline, retest as support, and then a move. So that's XRP. And again, people are going to say that XRP is bullish because the case has been decided. There's always precipitating events, precipitating causes, right? But again, the reason XRP moves, if it ever does move, is because for many years, and I mean many, many, many years, it's been consolidating. And this is why it's on my list of assets, because I recognized all of this consolidation, bullish consolidation, liquidity, right? For 4 years, 5 years, you've just been going up and down in this channel, accumulating buys, accumulating sort of bullish momentum for eventually somebody to, well, you're at the bottom of the range, right? Just like you did here, you're going to retest the top of the range. But here, it's likely that instead of retesting it in a bearish way, 1, 2, 3, if you go straight up, you know that you're an impulse finally. Okay? If we do something like this in XRP, you know that it's coming back down. Okay? Because a 3-wave move means it's corrective. But if we just keep going up from here, that's finally what you're going to see. You're finally going to see a clean impulse break of this channel. XRP has never, ever, ever broken this channel of accumulation. So this is why it's a really, really low risk trade. Always risk in any trading situation. But it's low risk because you're buying the bottom, you're buying support of this larger 4-year channel, and you're buying support of this 2-year channel. So you're buying double support. Okay? And those are the assets. It doesn't matter. People like to think, like, I thought the same way. This is what I'm talking. I'm not, again, it's not disparaging anybody. When I first started in crypto, I would only think I'm going to buy the lowest market cap asset because I want to make the most money on my investment, right? The highest return on my dollar is going to be had by buying the least valuable or the most distressed assets. But if you're keen, you understand that you can buy high market cap assets that present even less risk because they're high market cap assets. They have strong teams. They have a lot of money in their coffers, and still they're distressed, and there's still a lot of potential for them to give outsized returns based off of their high time frame trading profile. So yeah, this is why XRP, people joke 512 or something like that. Like, that's not a joke. If you know how to read the charts, like, that's not a joke. You're dealing with a massive accumulation in XRP, just like you're dealing with Tron, just like you're dealing with Litecoin. Massive accumulation. Okay, Zilliqa seems to be front running the market in this breakout, and we can see that this is really bullish, right? these corrective waves, they're so capricious, they're so difficult to read. But what you want to do is just look in terms of support and resistance. You can see clearly there's a channel that's been forming since mid-January, or even before mid-January, just going up and down this channel. But what's most important is that this is an upwards tilting channel. So you're doing two things. You're consolidating, so you're building momentum, so you're accumulating buys, but at the same time, you can't but help make higher lows and slightly higher highs because you have so much buy pressure from the bear market accumulation, okay? So that's what's happening here. At some point, Zilliqa is going to break this channel, and that is when you can expect it to explode for hundreds of percentage points per day, right? That's what we're looking at. We're looking at bullish accumulation. It looks one way in Bitcoin, testing that 25K level. This altcoin is showing you that it means business, and it's going to explode at any moment now upon breaking this channel, this 2-month channel. What? Yeah, it's over January, February. 1.5 month channel. Yeah. So that's Zilliqa. We have. Okay, VeChain. And again, one last point on Zilliqa. What's really important again is not necessarily like the fact that it's making higher highs and higher lows is good, but always you can break back down, right? The most compelling part of all of this is that in this consolidation, you're retesting this resistance, this bear market accumulation resistance as support. That's the most important thing. Everything else is secondary to that because that's basically claiming this level as done. Everything below that was accumulation. This is the confirmation of that. And now moving on to different things, So that there's no fear. So many traders trade out of fear. Fear of, downside risk if they're longing, right? And that fear is based off of not having conviction in where the market's going to go, but you have a lot of conviction when you see these RS flips. You should, at least, if you know what that means, especially on a high time frame. VeChain essentially did what most other assets are doing. They flipped the midline into support, and now they made their way to the top of the channel, okay? So you can see you don't have to know exactly how it's going to make its way, right? And I think this is the beauty of not knowing. And you don't have to know. Look at all this variation. These channels, now you're in pure impulse. It looks like you're going up straight. Okay, that's fine. As long as you're making higher highs and higher lows, flipping crucial resistance into support, you don't care. That's all you're tracking for. Okay? So that's what we did here. And now we're at the top of the channel. What do we expect? Some consolidation at resistance, break, retest, and continuation. That's it. You don't have to know how. People always want to know how, especially sometimes when they're trading on small time frames. They want to know exactly how it's going to do that. But sometimes you zoom out. You don't need to know how, and you can make better trades, more profitable trades by just knowing what. It's a strong uptrend, and it's a confirmed uptrend, highly probable uptrend, crucial resistance turned into support. So you keep going. Theta token, same thing. I don't have this channel drawn out, but we can do that really quickly, right here. If we take, where's this damn tool? I always forget where it is. I think it's here. Okay, here it is. Yep. Again, every asset is going to be a little different, and I spoke to this yesterday. Sometimes because of staking rewards, I don't really know how Theta, I know what Theta is. I don't know if there are staking rewards on it. I think there are. But you generally see a slumping, a consolidation, because people take profit. So I wouldn't be surprised if there were staking rewards in Theta, or it was being, claimed, sold off regularly in some way, shape, or form. So you get that. But at the end of the day, you see this channel. What's important is you want to reclaim it. And this is exactly what you're doing here. You break the channel, you reclaim it as support, you're on your way. You do not need to know on a small time frame what these waves are, if it's a leading diagonal, or if it's a this, that, and the third. Like, fact that you're going up, you made strong resistance into now strong support. That's the trade. It's simple. Right now, trading's really easy. Everybody wants to complicate things. They're buying and selling. They make great entries. They ruin it. They sell too early. You just want to buy and get the hell out of the way. If you're buying on leverage, you want to buy more carefully, drop down, make sure that you're not in the line of fire, protect against downside risk. If your position holds, you can make a fortune, quite simply, because the move is not a daily move, it's months of upward price action, right? The likes of which we haven't felt in this market for years, right? It's that, months of that, okay? 2 to 3 months of that. That's it. Change your life, right? You make life-changing money. That's how you make life-changing money. And it was done by trading, not necessarily getting lucky, selling out of fear. A lot of times you'll see this, and, for some people it's probably the best thing because they have no chart literacy. But a lot of YouTubers who don't read will say, you want to take profits intermittently. Every week, take some off the table. Okay, that's fine and well, but you really put a cap on your earning potential there. And it's really not that hard to look high time frame to see when the move is being exhausted on a high time frame. And we're definitely going to get into that, but we're not there. We're not even close. Not yet. So yeah, you don't want to cut your profit, cut your earning potential off by selling too early. A lot of people are going to overtrade this and do just that. They're going to sell too early, and then they're going to realize the trend's not even close to over. They're going to get back in. They're going to, that cuts their earning potential just like that. And then they're going to keep doing the same thing over and over and over again because they have no confidence in the read of the market. Doesn't have to be right, but you got to be confident. Scared money doesn't make any money. Same thing here. Telcoin, you came up, retested the midline, you came to the top of the channel, consolidating at resistance. You're going to retest that resistance as support, and you leave the channel. That's it. Simple, elegant, consistent, highly probable. Technical analysis doesn't need to be complicated. We can stay on the daily time frame. Consolidated at resistance, retested it as support. Now you can see that Matic is just making a series of higher highs and higher lows in very, very clear and almost unmistakable bullish impulsive price action. Okay, so just let it go. Just let it go. This is going to keep going for quite some time. It's going to keep going higher and higher and higher and higher. Okay, you're going to really feel it with Matic once it breaks this region, about $2.70. Then it's really going to fly. But up until then, you wait until it gets to that point, right? And it's going to take its time. Maybe it takes a little longer. People are going to trade in and out because they're going to have time. But once it gets to this point, 270, then it starts going stupid. And it just starts making, doing that pumping thing and being very volatile and violent. And then we can talk about targets, high time frame targets, right? And then when we can look to sell the position because the high time frame trend will be exhausted. And I was thinking about this the other day. Matic is going to be one of the first ones we consider that. on. Look at, I even have an alarm here. See, I have an alarm. Look at the weekly stochastic RSI. You can see it's already up here. It's already quite oversold. Okay? Or sorry, overbought. And just comparing it really quickly to something else with a decent amount of price action data, Bitcoin's up here too. So maybe that's not the most reliable thing. I don't know. Just I was thinking about this mostly because of my wave count. Okay, I'm not going to be over reliant on this indicator, but just my wave count. I feel if this is accurate, and I'm not exactly sure that it is, okay, because I don't know that. I don't know exactly what this is. Let me see something really quickly. I thought of this the other day. I'm like, this is, I feel like it's going to be one of the first ones I sell. I was in the kitchen. I was like, Matic. I won't be surprised if it is one of the first that I sell. 196. Yeah, 399. No. That's just my take. Look, what I'm going to do with Matic is I'm going to keep an eye on it. If this is a wave 1, wave 2 situation, right? And I think it is, just based off the time it took to go up, time it took to come down, the retracement level, all that stuff. Wave 3 was extended, right? This is where, like, a lot of people made life-changing wealth and, were kind of seen as geniuses in crypto because they bought Matic at, under 1 penny in India somewhere. I think this is a wave 4 correction. So I think you just got one more to go. And once, if that's the case, okay? If that's the case, let's see something. The indicator on the monthly time frame, okay, is going to be overbought. At that point, I'm going to look to sell because the monthly time frame being in this region is highly telling. Okay, it's not the weekly, the monthly. And the other thing is, I'm just going to go with my gut that this is indeed an accurate count. And if that is the case, I think I've already done this, but I would project the price for Matic to go to about the phi ratio. $9.33, thereabouts. Right? And that's exactly where I have that target for wave 5. I wouldn't be surprised if that were the case. Okay? I think in terms of return on investment, Matic's one of the lower ones because I'm only looking at this point for like a 5x, 6x, which is not that much, to be honest. Where, your average, I could be wrong, and that would, and I wouldn't be super surprised if I were wrong. Look, this is what I'm going to do. I'm going to monitor. Remember, you don't have to be scared. It doesn't work that it hits the target and then it just goes to hell. It doesn't work that way. We know that there, just like it took a while on a high time frame to distribute to accumulate before changing their trend from down to up in crypto. It took us 230 days. You will have time on a high time frame to sell the coming bear market. It'll be clear, okay? So, we'll talk about this a lot more in a month and a half as we prepare to sell positions. But one of the things I don't want to do is overreact. I want to be as clear as possible on this distribution range at the top. If we do hit the top, I want to see clear signals of distribution. And we're going to have to do it asset by asset because not every asset's going to reach the top at the same time. And we're not going to necessarily be able to use Bitcoin as that one timing indicator, because these altcoins are just going to do their own thing, generally speaking. Some of them are going to top one week, another one's going to top. Some of them are going to top first, others are going to top next. But I could be wrong, and there may be more data to this chart that we're just not seeing, and this may be a different count altogether, and so we may go much higher. If we break this phi ratio, what's the word I'm looking for? Kind of like with decisively? Yeah, decisively is the word I'm looking for. If we decisively break the phi ratio, and the character of the price action is still very bullish, then I'm just going to leave it and ride it. But yeah, there's a lot of things. We can talk about this later. This is a bit premature because, that's basically, we're looking for top indicators. But at this point in time, everything's easy. You just buy and hold. Everything's easy. There's not many times you can say that about trading, but trading's easy now if you can read the markets. All right, let's go back down and let's go on. So DYDX, same thing. You broke the channel to the upside. You retested it as support. And now you put in a wave 1, wave 2 situation. That's what it looks like to me. I have 1, 2, 3, 4 candles on the day. So 4 days up, 1, 2, 3, 4, 5, 6. I'll count maybe these 2 as consolidation reversal. So about 4 days up, 4 days down. That looks like a wave 1, wave 2 situation to me. Okay, so that's DYDX. Harmony 1. So actually you wanted Harmony 1. We have a break of the channel, very decisive retest. Love about this almost unambiguous, where you have strong reactions at previous support or previous resistance made into new support, right? That is a decisive flip right there, as you can see by those 3 candles. And you keep this trend going. There's no reason to come back down in terms of, oh, but you have to retest this, you have to retest that. Everything's been broken and retested. This was a retest of both this and that. So there's no objective technical reason why this comes back down like that. So what I would expect is whatever consolidation was going on here, for that to be a continuation of this trend. Okay. Another way to look at this is if you zoom out, you see it as a type of reclaimed resistance into support, right? An RS flip. And what you flipped is this previous resistance, right? Price obviously had some trouble at this level and couldn't get above it. You can see the very clean and strong rejection from this level right here for these days of trading in November of last year. And this right here was a reclamation of that level, retest of that level. So again, you flip levels, expect to continue, right? That trend is true. You continue that, and you just keep going. So those are the reasons why that looks very bullish. It looks like bullish continuation for me for Harmony 1. MOVR, Moon River, same thing. You did retest the top of this bull market or bear market accumulation. So, and you put in a very strong impulsive move up. You can see that this is very clearly a wave 1, wave 2, wave 3, wave 4 situation right here. Okay? Obviously. There's no doubts about that. And you're basically at resistance, flipping it into support. You continue. And that would be essentially a breakout of this inverse head and shoulders right there. Okay? Chain link, you're making your way up to the top of the channel. This looks messy. It does. But in this, there's some sort of retest of this midline. Now, this midline may not be pinpoint accurate just because, you could draw it maybe a little differently. Let's see. You could stretch it a little bit here, a little bit there. Right? At which point you could say that the retest was most likely, the retest of the midline region was most likely over here, okay? But in a sense, you've reclaimed quite clearly this level, which should have been resistance. You reclaimed it as support. You should be targeting the top, and you're waiting again, as usual. You know, we're consistent for a break of the top, resistance made into support, and then a continuation. That's it. Chainlink and all of these other assets that are kind of still stuck in their accumulation patterns, or at least in the region of accumulation, right? So Bitcoin is at the precipice, right? 25K, right at the resistance of its 250-day accumulation, bear market accumulation. Chainlink is still kind of in the thick of things. It's a little bit behind schedule, which you would expect. Chainlink's always a little bit behind schedule. But when it does break the top of this, then it starts to move with the verve that we should see in other assets that have broken their accumulation, their high time frame accumulation channels. Okay, Polkadot. It looks as if this was a break of the high time frame accumulation channel and a retest of it. And again, you may be able to redraw this in this way. Okay, I'm not cheating, but you can clearly see that there's some resistance, 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 resistance. And so this may be a flip right here. This three-wave move may be a flip of that resistance into support. Okay, I just, I have 21 of these, or I don't know how many. I have maybe 24 of these in the watch list. So I'm not like super careful how I drew these channels, but you get the gist of it, and that's what you're looking for. A retest of resistance into support if you're bullish. And key, finally, this one is something I bought on spot, super low market cap, super volatile, and these typically lead the way. Once they start going, they don't look back, and you can see very clearly once it left, and this was our high time frame thesis, or this was our thesis that we started the show with. Once you leave these accumulation channels, because you don't have all of the buying and selling that occurs in this region, you can move more freely. So exactly what happened in Key, once we broke and retested this accumulation channel of 250 days, we started moving like 100% at a time. Or is it 100% at a time? I don't know. We put in some crazy candles. I think I 3x'd my position in like 2 days. Let's see. And again, trading psychology. If you don't read, you see a 3x, people take profits. That's cutting into your high time frame profits, because you've been waiting for this for 600 to 800 days. We've been waiting for this time in the market for 600 to 800 days. We waited for the entire bear market to play out, the subsequent accumulation, and now this. You didn't wait 800 days for 2 or 3x. Okay? It's not greed, it's just being smart, right? So like I said, we put in a 129% candle on one day. We put in a 88% candle on another day. And I don't want you guys to think, oh man, you put in a 129% candle for Key, I got to get in on that. You can, but you don't have to. Remember, it's a bull market. Everything's going to pump at some point in time. Chainlink is going to pump at some point in time. People who think Litecoin doesn't pump or doesn't do anything, that's definitely going to pump. It's been pumping, right? Just wait. Another thing I did wrong in the previous bull market was I would always look at aside from what I had, right? I didn't really make a big plan. I was just shiny object syndrome, jumping from asset to asset, and the worst thing you can do. Like, one asset's moving, you're like, ooh, I got to get into that, and you get into it, and it's not moving anymore. And then another asset moves, you take your position, you divest yourself of that position, and you go into the other. Just wait. Let it run. Everything is going to run. Not everything is going to run the same amount, okay? But generally speaking, everything's going to have its day. So key, put in 129% the other day. Cool. It's going to cool off a little bit. Maybe it keeps going. But, another day, it's going to be another asset. And I know that. So I'm confident in just letting I've already decided, and I'm going to stick with my guns, right? This is who I came to the dance with, and this is who I'm going to dance with, whatever the expression is. I don't know. You know what I'm trying to say. Yeah. This is dance who you brought or something. Dance who you came with. I don't know the expression. Okay, so now we do FTM. Let's go like this. FTM. Okay, here we go. Okay. So yeah, this is another example of breaking your bear market accumulation, right? Very, very clean, clear. This is unambiguous. This is as straightforward as it gets. You have your bear market accumulation. That's when you're doing work, you're waiting, you're going up and down, you're range trading. You don't know what the hell's going on. This could be a redistribution. You don't know. This is the hardest time. And we did that. We lived through it. 250 days. Now it's not hard. This is now easy. The bull market for FTM started on January 1st, kind of like Bitcoin. You went up a bunch. I don't know what that was, but what was that? Okay, it's about a 2.5x, almost 2.5x, yeah? So 2.5x since from in January, right? Almost the entire month of January, you just pumped 2.5x, and then you came down, and you didn't necessarily come down in the same amount of time, for the same amount of time that you went up, right? And we know that because that took about a month, but then the move down took about 2 weeks, okay? So one thing you could see is a retest of this. That wouldn't be out of the ordinary, okay? Two things could happen. You could either continue up and just continue, because this is intra-wave consolidation, so you're making a lot of little wave 1, wave 2, wave 1, wave 2, wave 1, wave 2, and this would be another wave 1, wave 2 situation, and then you're doing that again over here, and you continue to go up. That's likely. Or you can be putting in, for the rest of the month, a continued move down, so that would be a wave 1, wave 2 situation. That doesn't seem likely to me, the latter. Just because typically we know wave 2 looks like a zigzag. You typically don't put in a flat correction, and a shallow flat at that, for wave 2 correction. So I'm not seeing this play out. I'm rather seeing a bunch of wave 1, wave 2s continuing. And this is what throws a lot of people off. It threw me off at first as well. Because I always said, well, I'm waiting for, wave 3, wave 4, wave 5. Like, that's not what you get in a high time frame read. Like, high time frame, from your perspective, the way you're going to see it develop, so like a weekly move or a monthly move, the way you're going to see it develop is a bunch of waves 1, wave 2, waves 1, wave 2, waves 1, wave 2, and then ultimately you see that wave 3 set in, and you're building iteratively, right? You're does that make sense? You're building on top of wave after wave after wave after wave, Russian doll after Russian doll after Russian doll after Russian doll, building the scope, the magnitude, the size of the wave that you're putting in, and then you gradually unfold into the subsequent waves. So the smallest degree puts out its wave 3, wave 4, wave 5, and then that leads into the next larger degree, and then the next larger degree. Do you see? So you start large, small, 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 and then small, 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 back to large. You unfold. Does that make sense? I know that sounds weird, but from your vantage, looking at it develop, that's something I took a long time to understand. Because, when we start studying Elliott waves, you just think really linearly. Like, okay, I'm looking for wave 1, and then wave 2, wave 3, and wave 4. And wave 1 should just be a big wave up. But actually, wave 1 itself is comprised of fractals of wave 1, wave 2, wave 3, wave 4. So practically speaking, this is what it looks like when it's a big move. Just a bunch of wave 1, wave 2, wave 1, wave 2. Okay, anyway, I think I've tried to make that point. If I didn't, then I didn't. Okay. Just on the smaller time frames, let's see. So on the 4-hourly time frame, I would say, yeah, it's more likely than not that you continue up to the upside here, because this is a bull flag, right? This is clearly impulsive, right here. Oops. This is clearly impulsive. This is clearly counter-corrective. I see 1, 2, 3, or flavor of 3 waves down here. Yeah, I see a flavor of 3 waves down here. And I'm seeing that this retracement doesn't come down to at least the 0.5 Fibonacci retracement level of this wave up. So this is likely a wave 4 situation. So I'm looking for wave 5, probably a move down, and then a continuation. I can see this continuing up, okay, on this time frame, 4-hourly time frame. My momentum indicator is kind of telling me that there's one move up, probably for wave 5, and then you can get a 3-wave move and then a continuation. So I think you're just going to continue to go up. Again, the main point is this is support. So even if you're unsure as to what will happen here, this high time frame support, 250-day support, as long as you protect against any downside from here, this is a really good trade. You're close enough to support where going long here is not a big risk because you're close to support on even an intraday time frame. So that's FTM. The next one, we're reading Gains for Block Patrol, right? Gains Network. And then we'll do Velo Protocol. So Gains is not something I have. Gains. What's the ticker for that again? Gains. GNS. Okay, let's do all sources. So GNS, let's just add Binance. Okay, I know nothing about this. Looks like it's something that just launched recently. Okay, on the 4-hourly time frame, you can see that we've basically just gotten a candle in mid-February. So just a few days ago, right? This is something that's just launched. We have so little data, but from the little data that we have, and that's the caveat here, there's so little data. So there's so little analysis that you can do, but assuming, and this is again, assuming that this is an impulse, right? And this is a retracement, 1, 2, in a flavor of 3, you can assume a continuation to the upside. Okay, but that's as much as I can say. I don't know the extent of this, right? Impulse. I don't know if this is a 0.5 Fibonacci retracement. I don't know if this is actually the actual length of this impulse. I don't know anything. But all I'm saying is it looks like a trend. counter trend should go into a trend. That's what I'm seeing on the small time frame. But that I guess that's kind of the risk with new tokens. You run the risk of not being able to read it. But I think it's still clever if you think it's fundamentally sound to buy even something that has very little trading data at the beginning of a bull market or towards the beginning of the bull market, because it's more likely than not going to perform because the rest of the market is going up. So that's what I would say about Gains Network. And finally, for JY, looking at Velo Protocol. So Velo Protocol is not something I've heard of either. Okay, and so let's pull up the Bitfinex chart. I don't like the Bitfinex chart. Looks like it's low data. Let's try something else. Let's try the KuCoin chart. Okay, it's a bit better. Okay, let's zoom out. Okay, so this has some trading data. This is something that's been around. Okay, and this is almost much like what we've seen. Okay, it's not perfect, but let's say from here. There we go. This works better. See that? How do you draw random lines on a chart? You try and connect as many points of the trend as possible. Okay? I could draw this line, this downtrend, so many ways, but the way that fits the best is where I get consistent touches and reactions in price. So here, this is probably 450 days, maybe 400 days, something like that. Ooh, 525 days. Okay, so 525 days of, it's actually more, but yeah, let's just say 525 days. This is your distribution, right? A, B, A, B, A, B. And then you went and distributed out of this. So 500 some odd days of a downtrend, okay, on the weekly chart. And you can see what we've done here is we've reclaimed, we've basically broken the downtrend, right? We went up, consolidated at resistance, and these past 2 weeks have been a breakout of 525 days of resistance. This is why, my friends, it's not that difficult in terms of trading the markets at this point in time. Like, when else are you going to get 650 days, 500 days, 525 days, 450 days of broken resistance to trade? Like, you know, if you read markets, you know that means it's going to go as high as it, what do they say in traditional markets? What's the saying? It's saying something about like the consolidation tells you the move up or something. I forget the saying, but essentially the idea that the degree of consolidation, the degree of the drawdown tells you the extent of the markup. So on the smaller time frame, Velo Protocol did what the rest of the market did. Okay? It started putting in, let's see. No, this looks a little different, doesn't it? Okay, this looks a little different than most of the rest of the market, because most of the rest of the market put in 250 days of sideways price action to absorb that drawdown. So here, that's what we're looking for, okay? You have the drawdown. Now, after the drawdown, if we're going to have a change in trend, a viable change in trend, we're going to have to absorb that supply, right? So that's what I'm looking for now. So I'm going to see if we don't have something like that. And we should to a certain extent, or else, you're not going to break resistance here. But we want to be careful. We want to be careful here. Okay, this chart is a bit unorthodox. It's unorthodox in that most of the rest of the market showed you very clean and clear accumulation since May or June of 2022. So all that time it was going sideways, accumulating. Okay, here we don't have that. It looks like we have a bit of accumulation starting in November. If that, let's see, I would say November, late November. Only at this point, right here, that may be all that's needed. But I'm just cautious. I want to be cautious here because I'm not exactly sure if that's sufficient to change that downtrend right there. So I come up to my 525-day resistance. I reject. I try again. I consolidate at resistance. I break up. Okay. Now what I'm looking for, again, is a retest of this 525-day resistance. A clean retest. So I'm going to drop down even on the 4-hourly time frame. And that might have been it right here. Okay? That might have been it right here. So this is unorthodox. And this is a good example how, even though the rest of the market's doing one thing, there's always one or two outliers, things that you wouldn't expect. But this just, instead of doing what most assets did in May and June, going sideways, this kept going down. So this Velo protocol is extremely distressed. So my thing is, I know nothing about this project, but I want to know fundamentally why the chart responded so differently than the rest of the crypto market, right? So we see the technicals and we want to then pose the question, why is the chart doing this? Was it hacked? Did it lose all its funding? Did everybody sell off? What happened where that it didn't do what 98% of the crypto market did in May and June, right? Go sideways. Put in 2 degrees of AB basing and a pivot. Maybe that was this, okay? Maybe that was sufficient. So it seems like it's really small, but for a few weeks, it did do sideways consolidation. Maybe that was all that was needed. That's what's really tricky about this accumulation reversal distribution channels. Sometimes there's no rule as to how long it needs to take, just because you had a drawdown that lasted 500 days doesn't mean you have to go sideways for 400 days or 300 days or 200 days before changing the trend. So that's what I'm seeing. Those are the questions I'm posing. I want to know why. With this Velo, I would do a little research and ask why. What was so different about it that in May and June, when the rest of the crypto market was pretty steady, going sideways in some way, shape, or form, it continued to go down impulsively. That I want to know. And then that would inform my confidence in buying here. This is one of those few examples, or one of those few instances where the chart should lead you to the news, and you want to be careful because who knows if this is a scam or something that's no longer viable because the protocol is broken. Then that would explain this break from the general trend in the rest of the market, and why, even though you're moving up, you probably didn't duly retest this 525-day resistance as support. So you can expect at some point a move back down like that or something. Do you see what I mean? So that's how I look at Velo Protocol. I would be very cautious here. I wouldn't say that for many other assets that are kind of exhibiting really reliable price action, but here I would be very cautious. Yeah, you're welcome, JY. So that's pretty much it. I'm just going to have a quick look at Bitcoin and then call it a stream. Okay, so let's jump down on the smaller time frames. Probably the hourly. Turn on our indicator. Okay. Looks like we're still consolidating at the bottom here. Let's go on the 15-minute time frame. Okay, it looks like the 15 minutes reset. Okay. Okay, so what it looks like to me is that you have this E wave, the last leg of your triangle, finished. And right here, you're essentially forming a consolidation reversal. And this is your first move. Your A wave, this is your B wave. Probably going to put another A wave, another B wave, and then a pivot. So maybe towards the end of the night, maybe into the open, tomorrow's open, we get the move. But I do see us getting that move sooner than later, in the coming hours. Yeah, that's what I'm seeing, throughout. And it's kind of looking like you're making some sort of inverse head and shoulders, which we know in terms of pattern analysis is a reversal pattern, right? The inverse is a bullish reversal. The regular head and shoulders is bearish reversal. So yeah, that's what I'm seeing throughout the market. Like you're doing basically consolidation reversal here for that move up. And you should get that move up sooner than later. This is a beautiful... Zilliqa is putting in just like a textbook bullish flag. Bull flag, rather. Oh. That's textbook right there. There we go. V-chain as well. Yeah, that's what it looks like. Yeah, definitely not bearish. It's still in bullish consolidation, but definitely looking for that breakout at any time, or sooner than later. That's what I mean, sooner than later. And then just having a quick look at the DXY. The DXY, is that 4 hourly now topped out? Okay, it's almost 4. So that 4 hourly is, yeah. See, it's basically exhausted all its momentum in basically chopping up and not making it very far, right? If you're bullish on the dollar, you hate this because you spent all of your energy trying to get up and you didn't really do anything. You pretty much went sideways and you're stopped out by that golden pocket 0.5618 region of this previous fall. So whatever you're doing here, it's more likely than not some mini distribution for continuation of this impulse. So the 4 hourly time frame is telling you the next 4 hourly candle is at 7. So yeah, I would expect the open of tomorrow's trading, pre-trading, or the open of tomorrow's trading in the DXY to open and really have our move, or maybe Bitcoin front runs that, who knows. But yeah, I see our move happening sooner than later because of that. yeah, so that's pretty much it, guys. Hope you're well. Hope you're well positioned because yeah, we've been waiting for a long time for this, and it's a great opportunity. So I hope you're well positioned. Hope you're doing well. Hope you're happy, and I will see you tomorrow. Take care.